Hello, this is a look at the Tradesight Seeker tool. We use this tool for measuring energy exhaustion in the market, trying to spot key turning points. There's a couple of components to the tool, but we're going to use this to show you how it worked on Tuesday, February 22nd. We had a Monday holiday here, President's Day in the United States. This is the S&P E-mini futures contract. That's the ESH1 contract that expires in March. And it's a popular trading tool for futures traders. We're going to take a look at how the 5-minute bar charts played out during the course of the day using eSignal's bar replay mode. I'm going to go ahead and start that right now. We'll discuss as we go. So every 2 seconds here will be a new 5-minute bar completing for the day. The way that the Seeker tool works is it looks for specific setups based on a look-back counting criteria. You can see the little 1s, 2s, and 3s and 4s start to form as we get a count in one direction, and then if we can get to a 9 count, then that's where things start to happen. In that particular case, you just saw the numbers erase because we did not get to a 9 count. Just lost another one there. So here we are about an hour and a half into the market, and we start to get our 4th attempt at a Seeker count today, and here's how we go. Heading down here. This is after, with a lot going on in the world, we had a gap down in the morning. Remember that Monday's trade that you see here was holiday activity, and then we gap down, headed up. And let's take a look here. I'm going to pause it. You can see we've now got what's called a 9-bar setup. So at this point there is an energy release that we're looking for. There's a couple of components to when that will play out. First will be when the look-back mechanism that we use to create our bar counts terminates, meaning the criteria is no longer valid. When that happens, you'll see a box draw around the setup. Secondly, from this point forward, because we've got the 9 count, we're going to start to use what's called a 2-bar look back and start to get what's called our 13 buy or sell signal potentially. And we'll let that play out. I'm going to start it back up here so you can see as it goes here. So now we've got a 1, and the red button, the red numbers are the ones that you want to watch. Again, this is now about 2.5 hours into the market. A 2, a 3. Okay, I'm going to pause it right here for a second. Alright, so here's the setup. And as you can see at this point, we've got a 10 count in the red numbers. And continue to push it forward a little bit. They are not consecutive bar counts looking for this energy release. When you get to the 13 count, that's where it would be your buy signal. So we now have an 11, a 12, and there's our 13 signal. And again, I'm going to pause it. Okay, so we've got a 13 signal, and immediately what the tool does is it draws a little line right here. So if you're going to buy right here, a break and a close under this line would be your stop. So we've got a very tight stop going long off of this point. A very tight stop. Now let's see how it plays out over the next hour or two. And you can see that, and what we do here is we usually look for about 6 ticks in the right direction on the ES to get a partial. Now watch it dip down here. Try to play with that line. It can't break it, can't close underneath it. In this case, doesn't even get through it. One more pass, let's see what happens. And look how that line becomes support. And now we start to tick up. And this is where we're able to get our partial and sell a piece and then move a stop up to give ourselves a winning trade. The key here is that this is high probability trade because of the 13 signal, and you can see that ultimately that risk level becomes support, remains support through the end of the session. So again, your buy signal is right here on the 13. You get enough of a bounce off of this, and look at that risk line become such a support level. Okay, that's a very specific way to trade. You have to be paying attention to the market. It works on stocks, futures, and forex on multiple time frames. But it gives you very high probability turning points in the market where you can get in. And of course, nothing works 100% of the time. So it also gives you a risk line that's relatively small risk for when the trade doesn't play out in your direction. This has been a look at the Tradesight Seeker tool.